Good evening, everyone. I'm Bruce Aust. I'm the Vice Chairman of NASDAQ, and I'm President of the NASDAQ Entrepreneur Center. You know, NASDAQ was built on the foundation of innovation and market disruption. The heritage continues to fuel our ambition, both in development of leading technologies and the way that we support great leaders through our nonprofit work here at the center. At NASDAQ, we believe there is exciting potential across the financial service industry to leverage blockchain. We're the first exchange to experiment with blockchain within its own operations. Within the NASDAQ private market, we ran a pilot that enabled private companies to successfully execute and document a private securities issuance on the blockchain. We're also leveraging blockchain-based voting and proxy assignment applications to reduce cost complexity in general meeting voting. Another pilot we've run with NASDAQ Talon listed companies has also been going very well. Since blockchain is ideal for tracking and tracing, it can improve auditing and regulatory reporting, both from a quality and efficiency standpoint. So we've just kind of scratched the surface of blockchain at NASDAQ, but we do see there's great opportunities. That's why it's very exciting to have this panel of experts here tonight. So let me bring up, obviously we have Dominic, and we're going to bring up Olaf Carson-Wee. He's the founder and CEO of Polychain Capital. Come on up, guys. So Dominic says he's the chief scientist, so he's already made me smell like the less smart guy in the room, but we're going to turn it over to these guys to have a great conversation around the future of blockchain. So Dom, why don't you get started? You know, blockchain means a lot of different things to a lot of people. Could you give us a 1-minute definition of the word from your perspective?
So broadly speaking, blockchain is a mechanism that makes it possible to create decentralized networks that provide some kind of service without any single point of failure or without a controlling organization. And you can build all kinds of things with blockchain. So Bitcoin is an example of a cryptocurrency built with blockchain. Ethereum is an example of a smart contract platform built with blockchain. And Definity is an example of an internet computer built using blockchain. Right.
So you talked about cryptocurrencies. Tell me, first, why don't you give me what do you think, how they fit into the whole blockchain world? And then Olaf, I'd like you to get your perspective.
So cryptocurrencies are one example of what you can do with blockchain. And they're relatively simple, at least in their current form. You know, typically they fix the supply of the tokens, and you know, basic economics is if you fix the supply, the value of the tokens will vary with demand. But it's important to realize that you know, you can do an awful lot of things with blockchain. So in the case of the internet computer, all of that software that's running on top of it is being powered by blockchain. And you can pretty much do anything you want with software. So blockchain can apply to almost anything.
Yeah, to add on that, I think that cryptocurrency, kind of digital gold or payment mechanisms, are kind of the first thing that has been created successfully in kind of a stable system. But I do think we are seeing more and more experimentation with more advanced types of financial contracts, things like stable or asset-backed coins, things like you know, exchange order books that are operating in smart contracts, things like decentralized options or derivatives. So to me, we're seeing kind of a second phase of expansion beyond just simple store of value and payments to more advanced financial applications. I do expect that beyond that, we will start to see even more complex applications that are all kind of secured by the underlying economics of that and incentive system of that blockchain ledger.
Awesome. So Dom, how does Definity fit into this blockchain world?
So, you know, Definity is a computation platform, right? We want to host the world's software and data, and, you know, first of all, that can just be used as an alternative to the existing traditional technology stack, right? So somebody who's got no interest in blockchain whatsoever might want to build a business system on Definity because it costs less to develop and maintain and administer, and because it's more secure and more reliable, and it can maintain the privacy of their data. But you could also use Definity because of the special properties that come from a computation platform that's really a blockchain. So for example, Definity supports a new kind of autonomous software. We've seen something very similar in Ethereum too, that can exist independently of any person or organization. So it's possible to reinvent, or will be possible to reinvent internet services that we would describe as open source businesses, in that they're tokenized and there's some kind of governance system controlled by the tokens that can be used to update this, update the software and the features and things like that. And it'll be possible to design these internet services in a way that gives users better guarantees about the privacy of their data and also about how their data is used. And we think that over time, this sort of open platform will be much preferable for innovators and entrepreneurs because the platform risk is reduced. So one of the problems for entrepreneurs today building in the existing internet services ecosystem is that if you build on another services API and you rely on that, that other API may disappear. And there are lots and lots of examples of that. For example,
right.
Some social networks changed the rules by which games could promote themselves, and that really undermined their ability to grow. So overnight their business model changed. And I think the open computation platform, now the internet computer, and the services built on top of it will provide people with much better guarantees. And so they'll benefit from what I describe as mutualized network effects. And once this thing really gets going, nobody's going to want to build against the traditional stack anymore. They're going to want to build on this platform where they get guarantees, their platform risk is reduced, and there are better opportunities.
So you talk a lot about open, but there's a word that we hear a lot in the crypto economies, decentralization. So what's it actually referring to, Olaf, and how does it relate to disintermediation?
Yeah, so it really matters that nobody owns the platform when you're building a business. So for example, if you look at the top 5 market capitalization companies today, they're all internet businesses, right? There's Apple, Google, Amazon, et cetera. And those companies could never have grown to the size that they have if they were building on some sort of permissioned network. So for example, in the early 90s, there was a big battle about Microsoft Net, what is today MSN, right, against the open internet. And because the open internet isn't a risk, there is no platform risk, you can actually see a business become larger than Microsoft, right? You could have never seen Amazon be built on the Microsoft Net, right? And so today, like when these companies have board meetings, they don't fret or fear about the internet being shut down or the internet being censored. It's a fully open platform that anyone can kind of build on. So to me, with blockchains, you really have the ability to build similarly open, permissionless financial systems where previously, there's always been banking infrastructure, rules about from the Fed level, from central banks, from the US government and other governments of the world. There's always been this sort of permissioned infrastructure about building financial applications. And for the first time ever, you pull that away and really you have an open, permissionless platform where anyone can build anything. And these are all globally interoperable. So whatever one person builds anywhere else in the world, some other developer can interact with. And so that kind of open, permissionless system is only possible through a decentralized architecture. The reason that the internet enabled that is that the internet itself is decentralized. And so, by building a blockchains on top of the internet, you really have, for the first time ever, this decentralized architecture on which these open financial services can be built.
That's pretty fascinating, and I think we're going to get into regulation here in a few minutes because I think that's obviously a topic that everybody wants to talk about when they talk about blockchain and cryptocurrencies. So Dom, what is autonomous software?
Autonomous software is just software that, by merit of it having some kind of economic backing, can exist independently of an individual or entity or organization. So you can imagine you design some basic internet service that had a governance mechanism built in, and you tokenize it. And using these tokens, the governance system will be able to decide upon software updates and things like that, and upgrade itself and develop. But there wouldn't be, a company, if you like, standing behind that system. So it's roughly analogous to open source software, which exists on GitHub and independent parties contribute to without some central coordinator.
Yeah, and I would expand that to say that this type of organization is really, to me, the next evolution of business governance and structure. So if you look way back, there wasn't an idea of a business. There was just individual people kind of doing things. You saw the rise of the corporation and the modern big business in maybe 1880, 1920. This is not that long ago. And now you have corporations that are 100 years old and have outlived any individual people, right? They're outside the scope of any human life. But those corporations, once again, are existing in a permissioned framework. Right. They're an actual legal entity with a certain jurisdiction. For the first time now, you can have this kind of similar concept of a smart contract based organization, or a DAO, decentralized autonomous organization, these are often called, where you have a pool of capital, very clear governance mechanism through underlying tokens that almost act like shareholder votes that can be transferable and outlive any individual person. But that DAO then exists in that permissionless blockchain environment and is kind of beyond any specific legal jurisdiction.
So you talked a lot about tokens, so could you give us in general, what is your thought and how does it fit into the blockchain context?
Yeah, to me, a token is a means to create an incentive mechanism for a whole network of people. So to date, these tokens have been used in order to incentivize adding security to the underlying ledger. And the reason that I can't go change the history of Bitcoin is because of the incentivization mechanism tied into new Bitcoin blocks, making miners mine at a very industrial scale. So to me, this is kind of the first cryptoeconomic system we've seen be successful, and we've seen it be really, really successful. Like once you get a cryptoeconomic system that works, it never stops working. So Bitcoin mining today consumes, I think, 0.5% of the world's energy output, which is like pretty startling. And so to me, like when you get a cryptoeconomic system right, it's really, really quite powerful. And so you could imagine lots of other types of things that we can incentivize beyond just securing a ledger, right? So I think there's lots of interesting projects aiming to incentivize things like file storage, or aiming to incentivize routing of packets, so there's added privacy, incentivizing computation. So I could run computations for somebody else on the network and receive tokens for doing that. So to me, a token is like this incentive mechanism to create from just what are rational kind of capitalist actors something that is much, much more powerful and beyond the scope of any individual person.
Right. So Olaf, I introduced you briefly as founder and CEO of Polychain. Can you just give us a brief rundown on Polychain and those who don't know?
Sure. So we are a cryptocurrency investment firm. So we manage several investment vehicles that are focused on investing in the cryptocurrency ecosystem. Our specialty is actual investment into underlying cryptocurrency protocols. So that means investing not in the equity of companies, but actually in the underlying coins or tokens that are part of these cryptoeconomic systems.
That's, and how much do you disclose that you're investing?
So I don't want to comment beyond what has been made publicly available, but we, our last filing, are managing over $1 billion.
That's what I heard. That's great. Congratulations. Dom, so talk about Definity and kind of what, you've been at this for a little while, and what do you see as your next big opportunity?
So yeah, we have been at it, for a while. So I mean, in my case, I started trying to design better decentralized networks at the end of 2013, and Definity has sort of gathered momentum since it was founded at the beginning of 2015, and we've been very fortunate because we started with a strong vision and strong sort of technology base, and so we've been able to scale out the team with genuine world-class research and engineering talent, and that scaling out is a critical part of our strategy, and it's going fantastically well. And we think the potential of this thing is almost unlimited, right? I mean, the whole world runs on software, and Definity, the internet computer, is designed as a better way of hosting data and software for a very, very broad range of applications. So, you know, we will just continue our strategy. We've obviously raised an awful lot of money, which will enable us to, you know, continue scaling as we have been, and hope to deliver the production network as soon as we can.
That's awesome. Well, Olaf, without giving away too many of your secrets, what are you excited about in the space that you're looking at right now?
So, you know, I think, so first a very brief history lesson to kind of explain what I'm looking forward to. So there was a long attempt in Bitcoin to build meta assets on top of the protocol, which is a very, very simple concept. Can you have a blockchain with more than one asset? Because up to that point, you just had Bitcoins on the Bitcoin network, right? And so there were projects like Mastercoin, now called Omni, or Counterparty, attempting to build these meta assets on Bitcoin. And really none of them took off, despite me following the progress of these projects very closely from 2013 through 2015. Meanwhile, Ethereum was launched. And then all of a sudden, I started to see these kind of what's called ERC20 tokens on top of Ethereum. And these are kind of meta assets on top of the Ethereum protocol. And all of a sudden, people are transferring things other than the native token Ether. They are transferring other types of tokens. And it happened very quickly. Like Ethereum launched in late 2015, and you started to see this activity within kind of 6 months. And so I thought, what really enabled this to happen on Ethereum when people had been trying to work on this on Bitcoin for a long time? And it really was because there was a more flexible and programmable scripting language. This is like a programming language that developers can use to interact with the protocol. It's more flexible and programmable, so people could build more advanced types of logic on Ethereum. And so to me, seeing that made me realize that you could hack away at trying to build meta assets on Bitcoin for a decade, and you would make way more progress just working on Ethereum for, say, 1 year. And the way that was unlocked was actually a better underlying protocol. So a lot of what I'm excited about are things that will once again unlock whole suites of applications that we've never really seen possible live in production. So, for example, the first live decentralized stablecoin, the Maker DAO system, that's live on Ethereum. It's not live on Bitcoin. And it's because you can build smart contracts that allow you to collateralize Ethereum-compatible assets to generate a stablecoin. And so now today, you see more transactional volume on Ethereum with assets other than Ether itself. Okay, and that's pretty remarkable to me. But this was kind of just one way to improve the underlying protocol. There's lots of other dimensions, right? It's not just improvements in the scripting language. So I do think more flexible scripting languages, for example, the Definity language is compatible with WASM, which I think is a very big deal. But then also there's improvements in governance, right? I think to date governance has been vague about who controls the blockchain. And I think that if we want to see trillions of dollars of international industry rely on this system, there needs to be a very clearly specified governance model. So I think underlying token voting is another thing I'm very excited about. Another area beyond governance and beyond scripting language is just the underlying consensus mechanism. So in Bitcoin and Ethereum, you have this proof of work mining. This works well. But I do think that there could be more efficient mechanisms that lead to better transactional throughput at that underlying blockchain layer. I do think, though, that there's been a lot of development recently at what you might call the layer 2. And this is kind of think about a way that we could transact and then sort of settle to the underlying blockchain, but not have each of those individual transactions post to the blockchain. So, for example, the Bitcoin Lightning Network, I think, has made very good strides there. So really, to me, technologically, this is the most exciting time there's ever been with cryptocurrency, because there are so many smart people working on so many different architectures that have fundamental trade-offs, right? So we're seeing many experiments in different dimensions. And I think that it's just an exciting time, because a lot of those projects are going to go live over the next, call it, 18 months.
Yeah, there is definitely you can't pick up a magazine today without reading about blockchain and cryptocurrencies and the excitement around that. But you did talk a little bit about, and just to get your guys' perspective while I've got you on stage, maybe Dom, we talked a little bit about earlier, the concerns around regulation, and how is the U.S. looking at it versus other places you might operate in?
Yeah, so the first thing to remember is a lot of ICOs are run using Ethereum technology. And the Ethereum network is designed to be unstoppable. And people are running these ICOs using smart contracts. So irrespective of what regulators say, it might be very difficult to actually stop ICOs happening, especially internationally. So I think the US regulators have to be very careful not to use too heavy a hand and just exclude the American technology economy from some of the benefits that the sort of explosion in decentralized financing is going to produce. But having said that, I also recognize there are a lot of bad operators in the space because it's been made so easy to raise money, and a lot of people have taken advantage of that. And I'd like to see the prosecution of obvious scams and egregious bad practice, and hopefully existing financial institutions can help create indices of respectable projects and help protect consumer investors that way too.
Yeah, I mean, to me, it's at this point uncontroversial, I think, to say that ICOs represent the most efficient form of capital formation that we've ever seen. No offense to NASDAQ.
We've got a few big companies, but
yeah, but it's really like startling. Over $10 billion has been raised using this technology that's like, was this obscure thing just a couple of years ago. Right. So to me, this is, a lot of the regulatory agencies, in the U.S. and abroad, are here to facilitate that type of capital formation. It's not a bad thing, but it needs to be regulated in such a way that bad actors cannot take advantage of this to defraud people. So to me, I'm optimistic that regulations here and abroad will target bad actors who are aiming to defraud and hurt people, but also, in the end, facilitate entrepreneurs who really want to create wealth in the world and create something valuable. And oftentimes, the way that a modern entrepreneur might do that is through decentralized crowdfunding. So to me, I am hopeful that there can be the appropriate balance there.
Right. We had a record number of IPOs this week, so
okay.
Some companies are still doing the traditional way, but you're right. I mean, and NASDAQ embraces that because, 45 years ago, there was no electronic markets, and stocks did not trade. They traded on floors in old-based exchanges, and today, every market around the world trades electronically. So, and that's why we are ourselves, if we're going to look at this, NASDAQ as an exchange needs to make sure that we're at the forefront of blockchain and making sure that we are okay with disrupting ourselves if that's the opportunity. So we'll have our Chief Regulatory Officer talk about that in a few minutes. In just the last few minutes we have left, would love to hear it's been a great education for me spending time with you guys today. But, Dom, maybe you could just demystify this whole space because there is such a, scariness around it a little bit. So from old guys like me, so maybe not from young guys in the audience, but from old guys like me, there is this fear of cryptocurrencies and the blockchain world and what it means. So maybe demystify it a little bit for us.
I think the space is developing, and certainly, as with all new technologies, sometimes they get bundled with a belief system. So, in the early days of the internet, there were lots of idealists and people driven by this or that political belief, and the reason is that these fundamental technologies can unlock really positive, impactful change. And that's also true with blockchain. But, that doesn't mean that, blockchain is a belief system, right? And there's a lot more to it than just whether Bitcoin's going to be a world currency, right? And a lot of it is just about, cold hard computer science. We can create, in the case of DFINITY, this internet computer. We can make it less expensive to develop and maintain and administer business systems, for example, right? And worldwide, there are lots of businesses and governments that are constantly pained by the expense of developing IT systems and maintaining them and administering them and making them secure and keeping user data private. So, we're addressing really just fundamental practical problems. And when you look at it like that, there's nothing to fear.
Oh, that's great. Olaf, anything
there? Yeah, I mean, to me, I do think that this is really like esoteric technology, and it came from this kind of open source ecosystem that already was like pretty obscure before cryptocurrency. So I just think that we've seen like a very rocky mainstreaming of something that like came from very obscure fringes of our society. Now that said, I don't think there is nothing to fear here. I mean, this to me, now that we have unlocked, peer-to-peer money, it will never go away. Like, this is an unstoppable force. Try to shut down Bitcoin. Like, the governments of the world could try to team up and shut down Bitcoin, and they couldn't. You would literally have to unplug the internet. So to me, peer-to-peer systems are, in a sense, to be feared, right? If you are, a central banker or whoever else that has been used to just controlling these systems, once you go fully peer-to-peer and have these incentive mechanisms in place, it's really, really hard to stop them. So I do think, in a sense, the genie's out of the bottle, and at this point, it's somewhat inevitable.
No, that's great. So I lied there. I've got one more question because you guys are so fascinating. 20 years from now, where are we going to be with, what are we talking about on the stage around this space? And what about, what's the monetary world going to look like?
So one thing's for sure, we won't be talking about whether blockchain will succeed and what it'll do. We'll be talking about blockchain-specific matters, or probably we won't even be using the word blockchain. We'll be talking about the nuances of the systems running on them, because they're all going to be completely mainstream. So, I think when you're trying to look into the future with respect to something like technology, a good way of doing it is to, just make a statement and ask if it's truthy. So, a lot of people say, Bitcoin's terrible, it's going to go away, and all this kind of stuff. And well, you could make a statement like, blockchain is stupid, cryptocurrencies will fold and disappear, and this technology is going to be a footnote in history or something like that. And you look at a statement like that, and it's clearly absurd, right? This is the beginning of an enormous wave of innovation, and as Olaf says, the genie's out of the bottle. It's not going to go away, and the efficiencies and other amazing things that this technology can unlock, I think will mean that it'll drive enormous change in the world over the next 20 years. And in 20 years' time, some of the questions that are asked today about the technology will seem absurd, right? Yeah.
I think in 20 years we'll look back and it will all have seemed very obvious. Just like the internet now seems obvious. Like, of course that was a big deal. But I think in 1993 or 1994 that wasn't really clear to everyone. Right. So, beyond that, though, one thing I really look forward to is interoperable web services. So when you're building things on top of a blockchain-based stack of technologies, you have an open data layer, right? So different web services can all permissionlessly interact with each other. So what this ends up looking like pragmatically is like I might have a sword or a character in a video game and be able to carry that into a different video game. And that's like weird counterintuitive behavior for us, but this would be true of the entire suite of services built on top of this kind of Web3 or blockchain-based architecture. So you'd have, your Twitter follower count, might be able to like interact with your reputation as an Uber driver or something. There's kind of like hard to imagine emergent behavior that comes out of building on a completely new architecture. So a lot of what I'm excited for are the things that seem unimaginable to now and right now. And what I mean by that is in the early 90s, people didn't even really conceive of things like Facebook or things like Wikipedia. It's not like people knew what was going to be built with this technology. You just have kind of a gut feeling that this is going to unlock a lot. And so I very similarly don't even really try to pretend I can identify everything that will be built here, but I do trust that gut feeling that so many people here probably share, that this will just unlock kind of the unimaginable.
Right. Well, I'm the old guy on the stage, so I was at NASDAQ in 1998 when we had all these great IPOs, and 20 years later, they're amazing companies, and we've got the 5 largest companies in the world by market cap traded on NASDAQ today. So this has been a fascinating conversation. It is going to be great to see. I wish I could jump forward 20 years, but Olaf and Dom, thanks so much for your time. And we're going to run a quick video, and then we'll start the next panel. Thanks, guys.
Thank you.
Thank you, Bruce.